All right, folks, gather around. Today we're diving into a fascinating story that has the crypto world buzzing. Let's talk about Pi Network, a cryptocurrency that's been making waves, and not just any waves, or should I say ripples in the digital pond. This isn't your average crypto story. You see, Pi recently announced a massive $100 million ecosystem fund aimed at boosting its development and adoption, which in theory should have sent its price skyrocketing. Investors were excited, anticipating a surge in value. However, and here's where things get interesting, the exact opposite happened. Instead of a rise, we saw a dramatic fall. Pi's value plummeted like a lead balloon filled with hopes and dreams. It was a shocking turn of events. Now you might be thinking, isn't a $100 million investment a good thing? Shouldn't it have boosted confidence? And you'd be right, under normal circumstances. Such a significant investment usually signals growth and stability, but in the wild, wacky world of cryptocurrency, things rarely go according to plan. The market is unpredictable and often defies logic. This isn't your typical case of market economics. Traditional rules don't always apply here. Oh no, this is far more intriguing. It's a tale of unexpected twists and turns. This, my friends, is a story about hype, hope, and the harsh realities of the crypto market. It's a roller coaster of emotions. Buckle up, because we're diving deep into the world of Pi Network, where surprises lurk around every corner. Where the only thing more volatile than the code is the price. Stay tuned as we unravel the mystery behind Pi's plunge and explore what it means for the future of this intriguing cryptocurrency. So what exactly is this $100 million ecosystem fund supposed to do? Well, imagine it as venture capital for the Pi universe. This fund, aptly named Pi Network Ventures, aims to nurture and grow projects built using Pi's technology. We're talking everything from online shopping and financial services to those fancy new AI thingamajigs and of course gaming. Because what's a good cryptocurrency without a healthy dose of speculative digital assets? The idea is to create a thriving ecosystem around Pi, making it more than just another digital token you trade online. It's about building a whole digital economy, which on paper sounds pretty impressive. But, and there's always a but, this is where the rubber meets the blockchain, so to speak. You see, in the days leading up to the grand announcement, Pi's price was climbing faster than a cat trying to escape a bath. The excitement was palpable, and the air was thick with anticipation. Investors were glued to their screens, watching the numbers rise and dreaming of the fortunes they might soon hold. It was a frenzy, a digital gold rush, and everyone wanted a piece of the action. Why, you ask? Because, dear viewers, the crypto world thrives on rumors. It's a place where whispers can turn into roars and speculation can drive prices to dizzying heights. In this world, information is power, and even the hint of a big announcement can send the market into a frenzy. Traders and investors alike were buzzing with excitement, sharing theories and predictions about what was to come. And the rumor mill was churning overtime, speculating about a major game-changer for Pi. The possibilities seemed endless, and the speculation was rampant. Some believed that this could be the moment that Pi would break into the mainstream, while others thought it might be a technological breakthrough that would revolutionize the entire crypto landscape. Some whispered about a potential listing on a big-time cryptocurrency exchange like Coinbase or Binance. Such a move would undoubtedly catapult Pi into the big leagues, giving it the kind of legitimacy and exposure that could send its value soaring. The mere thought of it had traders salivating at the potential profits. Others hoped for a token burn, a fancy way of saying they'd destroy some Pi coins to make the remaining ones more valuable. This strategy, often used to control inflation and increase scarcity, was seen as a surefire way to boost the coin's value. The community was abuzz with excitement, each rumor adding fuel to the fire. But when the announcement finally arrived, it was like opening a beautifully wrapped present only to find a sweater 3 sizes too small. The reality fell far short of the hype, and the collective sigh of disappointment was almost audible. The grand reveal turned out to be a minor update, something that barely moved the needle. The excitement evaporated faster than a drop of water on a hot skillet, leaving investors feeling underwhelmed and, frankly, a little cheated. The price of Pi plummeted as quickly as it had risen, and the dreams of quick riches were dashed. It was a stark reminder of the volatile nature of the crypto world, where fortunes can be made and lost in the blink of an eye. Now, to be fair to Pi, building a robust ecosystem takes time. It's not like you sprinkle some magic internet money and suddenly, you have a fully functioning digital society. These things require careful planning, development, and a whole lot of luck. The projects funded by Pi Network Ventures will need months, if not years, to come to fruition. And even then, there's no guarantee they'll be successful. The crypto landscape is littered with the digital carcasses of projects that promised the moon but landed with a thud back on Earth. Section 5. The Missing Pieces Exchanges and Tokenomics. Adding fuel to the fire of disappointment was the lack of any mention of a major exchange listing. This was a big deal for Pi investors because getting listed on a reputable exchange would open the floodgates to more buyers and, theoretically, drive up the price. Then there's the issue of tokenomics, the economics of a cryptocurrency. Pi has a lot of coins in circulation, which can dilute its value. A token burn could have addressed this, but alas, it wasn't on the menu either. Section 6. When crypto catches a cold, Pi gets the flu. As if things weren't bad enough for Pi, the entire cryptocurrency market decided to throw a tantrum around the same time. Bitcoin, the granddaddy of crypto, took a tumble. And when Bitcoin sneezes, the rest of the market catches a cold. This broader market downturn added to the downward pressure on Pi's price. It was a perfect storm of bad timing, unmet expectations, and a general sense of here we go again from seasoned crypto investors. Section 7. Love it or leave it. The community responds. Now, the Pi community, like any good online community, is a vibrant mix of opinions ranging from die-hard evangelists to skeptical cynics. The reaction to the Ecosystem Fund announcement was, shall we say, mixed. Some praised Pi's long-term vision, arguing that building a sustainable ecosystem takes precedence over short-term price pumps. Others, however, were less than thrilled. They pointed to the lack of working decentralized applications, or dApps, despite years of promises. In their eyes, this ecosystem fund felt like too little, too late. Section 8, reading the tea leaves, charts, a mixed bag for Pi. Now let's peek behind the curtain of technical analysis, shall we? The charts, those squiggly lines that crypto enthusiasts obsess over, paint a somewhat confusing picture for Pi. On the one hand, there are signs of a potential rebound. On the other hand, some indicators suggest that Pi might be in for a bumpy ride in the near future. It's enough to make even the most experienced trader reach for their antacids. Section 9. The long game. Will Pi rise again? So, where does this leave Pi Network? The journey of Pi Network has been nothing short of a roller coaster ride, filled with anticipation, skepticism, and a fair share of excitement. As we stand at this crossroads, the future of Pi Network is shrouded in both potential and uncertainty. Well, the answer, as with most things crypto, is a resounding "it depends." The cryptocurrency market is notoriously volatile, and Pi Network is no exception. Its success hinges on a variety of factors, each playing a crucial role in determining its fate. The success of the Ecosystem Fund and the future of Pi itself hinge on a multitude of factors. The development team's ability to innovate and adapt to the ever-changing landscape of digital currencies is paramount. Their vision and execution will be critical in steering Pi Network towards success. Will the funded projects deliver on their promises? This is a question that looms large. The projects that receive funding must not only meet their goals but also contribute to the overall growth and stability of the Pi ecosystem. Will Pi attract more developers and users? The network effect is crucial in the world of cryptocurrencies. The more developers and users Pi can attract, the stronger and more resilient its ecosystem will become. Will it finally get listed on a major exchange? Listing on a major exchange could be a game changer for Pi Network, providing it with the visibility and liquidity needed to thrive in the competitive crypto market. And perhaps most importantly, will the broader cryptocurrency market recover from its current slump? Only time will tell. The overall health of the crypto market will undoubtedly impact Pi Network's prospects. But one thing's for sure, the story of Pi Network is far from over. The community behind Pi is passionate and dedicated, and their collective efforts will play a significant role in shaping its future. It's a story that highlights the roller coaster ride that is cryptocurrency investing, full of dizzying highs and gut-wrenching lows. The journey of Pi Network is a testament to the unpredictable nature of digital assets. It's a story that reminds us that in the world of digital assets, anything is possible, but nothing is certain. The potential for innovation and disruption is immense, but so are the risks and challenges. And that, my friends, is what makes it so damn entertaining. The unfolding saga of Pi Network is a captivating narrative that keeps us all on the edge of our seats, eagerly awaiting the next chapter.